am here. Hello, everyone. My name is Amy Brown, and I am here to share Lesson 5, which is Chapter 4, Exercise 5 of the Accounting 201 class. I'm going to go ahead and click over to my screen share, and we will go ahead and talk about cash basis versus accrual basis of accounting. One moment here. All right, so I've copied the information over into a spreadsheet so that it's much easier to work with. So we're asked to look at cash basis versus accrual basis, and we're going to talk about Sandhill Corporation. The exercise reads, in the first year of operations, Sandhill Company recognized $33,900 in service revenue, $6,200 of which was on account and still outstanding at the year's end. The remaining $27,700 was received in cash from customers. The company incurred operating expenses of $16,600. Of these expenses, $12,940 were paid in cash. $3,660 was still owed on account at year end. In addition, Sandhill prepaid $2,670 for insurance coverage that would not be used until the second year of operations. So if we're going to look at accrual basis versus cash basis accounting records revenue at the time that cash is received and records expenses when they pay the cash. So we're going to solely look at cash items on the information. So I've gone ahead and I'll use my little pointer here. I highlighted or bolded the items that were cash items in the information so that we could transfer those two down below. So $27,700 was the revenue received in cash, and we'll put that in there as a positive number. Then the expenses that were paid in cash is $12,940. So I put that in as a negative number, which shows the parentheses around it, so it's a negative number. And also they paid out cash of $2,670 for insurance coverage. Even though it's not going to be used until next year, that prepaid insurance, they paid cash out, so they're looking at that cash as well. So that's down here as a negative number, and I did a sum of that information, and we come up with $12,090 in net income. So we'll go ahead and put that $12,090, and didn't format it before, but here we go. And we'll format this one as well. All right, so that gives us the answer to the cash basis of accounting. It looks at those simple things and reports almost solely on cash information. Although it's much simpler, it can be a little misleading. So we'll look at the accrual basis, and the accrual basis of accounting, transactions that change a company's financial statements are recorded in the periods in which the events occur, such as when the revenues are recognized and when the expenses are incurred. So it's a little bit more all-encompassing of the activity, the financial activity of the company. So I have highlighted in red the information that is taken into effect in the accrual basis system of accounting. So $33,900 is revenue. So we put that down here in the box for service revenue. And then it tells us the company incurred operating expenses of $16,600. So therefore, we're going to put a negative amount in there and come up with a net income of $17,300. So the difference between the two can be quite extreme between the accrual basis and the cash basis systems of accounting. So what we're told in the book as well, in the textbook as well, is that cash basis accounting is not in accordance with GAAP, with the generally accepted accounting principles. So therefore, The which basis of accounting provides more useful information for decision makers? It is the accrual basis. I hope that this has been informative to those of you who have watched, and I hope you all have a great day. Thanks.